Hello and welcome back to my YouTube channel. So today I'll do questions for the August 2025 mock paper. And I'll start with question 21. I'll attach this paper at the description below so that you'll be able to access it from today. So I'll do more questions. I'll do the all questions from section 1 to question 25. So today I'm starting with question 21. So I'll read the question straight away. The following financial statements belong to Quelly Limited for the years 2021 and 2022. So we have a statement of profit or loss for 2022 and 2021 in that order. Then we also have the statement of financial position where we have 2022 and 2021. We have the non-current assets all the way to total equity and liabilities. So required, number 1, determine the liquidity and solvency ratios for the years 2021 and 2022. So we'll say Roman 1, then you write liquidity and solvency ratio. So you, as a student, you have to know what liquidity and solvency ratio is. So the first one, so we'll have the years. So the way they appear. We have 2022 and 2021. Let me see if I drag, then it can copy the 2021. That's okay now. So we'll start with the first liquidity and solvency ratio, and that ratio is the current ratio. So we'll start with the current ratio. Then notice the formula for the current ratio. So the formula for the current ratio is the current assets divided by current liability, as the name suggests, current. So it's a current assets divided by current liabilities. So straight away for 2022, we'll look at the current assets. So current assets and current liabilities are found on the statement of financial position. So you go to the statement of financial position for 2022. We have here adding current assets. So the total for current assets will be inventory, trade receivables, cash and cash equivalents. And when you add this plus this plus this, it will give you 3815. So it was 3850, though the shillings are in millions. Let me capture that. Sorry, let me capture that because it's very critical. So we'll have shillings in millions. So the shillings are in millions. That will be our first row. So we start with the current assets. Sorry for that. Sorry, current ratio. As one of them, liquidity and solvency ratio. So the formula I've said is the current assets divided by what? Current liabilities. So you go and check on the statement of financial position. We have the current assets. When you total that, the totals are here. So I'll take that and I divide by what? Current liabilities. So current liabilities are here. Trade payables, accruals, and current tax. A total of 1005 that way. So once you divide it, it will give you that ratio. So it was 3.79. So that's the current ratio for 2022. And because 2022 and 2021, they're along the same line, I'll drag to see what we have under 2021. So in 2021, they're giving me F33 divided by F48 here. So let me look at cell F33 just to confirm. This is F. So 33 is this one, correct? You divide by what is the current? This one, divide by F48. So it's F33. So just drag F33 divided by F38. So I'm done with that ratio. I'll go to the next liquidity and solvency ratio, and that's the acid test ratio. Acid test ratio. So the formula for the acid test ratio is that you take the current assets, but you subtract the inventory. Then you divide by the current liabilities. Okay? So I'll say equals to bracket. I'll take the total current assets. And the total is here for 2022. That's what we are dealing with. But to deduct the inventory. The inventory is there, 1500. Then that's what you divide by the total, the total current liabilities. Yeah, so in this case, the 1005. Yeah, that's all. Then you enter. So once you enter, you'll have that acid test ratio. Then you drag it that way. And you'll have for 2024, just click and just to confirm, F33 minus F30, you divide by F48. Yeah, that's correct. Yeah, that's what it is. Yeah, so we continue with the other liquidity and solvency ratio. The other one is the debt to asset ratio. Debt to asset ratio. So what's the formula for the debt to asset ratio? So the formula of debt to asset ratio is the total debt you divide by total assets. So total debt is always the liability. Yeah, so you say equals to the total liability. So we have non-current and current. Yeah, so for non-current, we have 1300, then we'll add to current, which is 11,000. So this is what we're going to do. So I'll say equals to bracket. The total liability is the debt here. Start with the non-current. The total for non-current was that. Plus you add 2 total for what? For current liabilities, which is that value there. Then that's what you'll divide by what? You divide by the total assets. The total assets. Yeah. So my total assets, I think it's given directly. Total assets is here. This one. Yeah, so you divide by that. Then you enter. So once you enter that for 2021, you just drag. Yeah, it will have copied the formula. Then the other one is the debt to equity ratio. Debt to equity. Debt to equity ratio. Yeah, so the same thing. So we'll have the total formula is total liabilities. You divide by what? You divide by total shareholders equity. Yeah, total shareholders equity. So the total liability now will be equals to. So I'll put a bracket because I still pick them. So I'll go to total for non-current, which is 1300. Then I add to the total for current liabilities. Then you close the bracket. Then you divide by the shareholders equity. So if under equity, it's here. So these are the shareholders equity. So the total for the shareholders equity was 13,000. So you divide by that 13,000 to get a debt to equity ratio. You enter. So once you get that value, you just drag. Yeah. So in this question, I expected you as a student to get 2 marks. Yeah. So it means that if you're able to identify a liquidity and solvency ratio as current ratio, and you get this value, these values here, I'll give you a mark. Acid test ratio also, I'll give you another mark here. Yeah, so even if you don't calculate these other ratios, I'll give you 2 marks. For 2 ratios done correctly, you get your full marks. Yeah, so that's why it was 2 marks. So I'm done with that part 1. Then I'll go to Roman 2. That was liquidity. So I'll go to Roman 2. Sorry. Yeah, so we'll have a Roman 2. And yeah, the same thing we'll do. So the question says that we determine the profitability ratios for the year ended 2021 and 2022, the same. So here we just write profitability ratios. Then come here down to have the years. So here we'll have 2022. So I'll just copy back then I drag the 2021. Then the shillings were in millions. I'll also capture that so that when I drag it, just copy. Okay? Yeah, so we know we are now under profitability. So which is the first profitability ratio from the word profit? Yeah, so we'll start with the gross profit margin. And let me see if there was gross profit on that statement. Yeah, so that's what will guide you. So I'll start with the gross profit margin. Yeah, for profitability ratio, these are things you don't even have to worry and cram. The same to liquidity and solvency ratio. Those are things you can master without any problem. So gross profit margin for 2022. Yeah, that's what we're going to do. So what is the formula for the gross profit margin? As the name suggests, it will be gross profit over revenue. So all these margins of profitability ratios, most of them are under over revenue. Most of them are classified under revenue, especially those items that originate from the statement of profit or loss. So in this case, you'll have gross profit. You divide by what? By total revenue. So what is our gross profit? So you go to the statement of financial position. And these are our gross profit for 2022. You divide by what? By revenue. So that's our revenue. So just divide it that way and you are done. And you enter. So you have that 0.6. So I'll drag the same for 2021. Let me extend that. For 2021. So you just have to click to confirm. It's telling me F10 divided by F8. Yeah, so that's correct. Yeah, then we continue. The other one, after gross profit, what do we have? Yeah, we have the operating profit margin. Operating profit margin. That's a ratio. So what's the formula for the operating profit margin? It's always earning before interest and tax, you divide by revenue. Yeah, so we'll check for earning before interest and tax, you divide by revenue. Earning before interest, profit before tax. And this earning before interest and tax. So interest is the finance cost. Yeah, you see this finance cost, that's the interest. Yeah, so operating, you'll do this. So we have said that the formula is the earning before interest and tax. Yeah, so I think that I'll have to include, so I'll say equals to bracket. That was not given directly, yeah, but we'll find it. Yeah, so it means that it's going to be earning after at this point where we had the finance cost. Yeah, so it means that you are not supposed to, when you deduct finance cost, it's earning before interest and tax. Let me do it here. Let me remove that. Earning, it's quoted as earning before interest and tax, EBIT. So it means that it's earning before you pay interest and tax. Yeah, so in this statement, we are up to finance cost, so that we have profit before tax. Yeah, so it means that the earning before interest and tax should not consider 80, this negative 80. So this is what we do. So this was the earning. So we have a gross profit of that. Investment income, okay. Then you subtract administrative and what? And distribution. So to get the earning before interest and tax. Yeah, so it means that you just sum all this up to distribution. Yeah, that's okay. Yeah, that's okay. So this is what we're going to do. And operating, and to pay attention. Yeah, once you know the formula, then you run away with it. Yeah, so the formula will be equals to from gross profit all the way to this year, because we are not supposed to consider finance cost, because that's interest and it's earning before interest and tax. Yeah, so what is this earning? So you'll highlight that, then you go to Yeah, in most question, they will give you the earning before interest and tax directly. But in this question, if they're not, it's not given, then it's upon you now to determine at what point do you have earning before interest and tax. Yeah, so I'll sum all that. Sorry. What's happening? Yeah, so this is what I'm going to do. Let me just do it here. Yeah, so my earning before interest and tax for 2022 will be equals to, it's equals to sum. You have to sum from gross profit all the way to distribution. And yeah, so we'll have 1650 as our earning before interest and tax. Yeah, let me put it here. Yeah, so it means that that's the earning before interest and tax. For revenue, we have revenue, yeah, because you divide it by revenue. So just come back here and so equals to, the value is already there, calculated 1650. You divide by what? You divide by the revenue. Divide that by the revenue. So our revenue was 3600. So you enter. So once you are done with that, you drag for 2021. Sorry, let me undo that. Yeah, you drag, and when you drag, it's giving me 0. So it means that what's happening is that let me see. Why is it giving me 0? No, it can't be. It can't be 0. So I'm going to calculate again for 2021 the earning, because it was not given directly. Yeah, so I can't be correct doing that. So I'll say equals to the sum, the same way, to get the earning before interest and tax, because that's what we are looking for. Yeah, so I'll sum all this from gross profit all the way down. Sorry, up to distribution costs. So put a bracket and enter. So we had 450 as the earning before interest and tax. So alternatively, because I've removed the finance cost here, you just take this 1570, you add back the 80, you get 1650. You take 390, you add back the 60, you get 450. Yeah, you can do it that way also. It will make sense that way. So I can see this value has changed. It was 0. Let me see if we'll get the same value. So the same thing, we'll take the earning before interest, which is 450. Interest and tax, you divide by what? Divide by the revenue. My revenue is here. Enter. Yeah, you see now that's now makes sense. Yeah, that makes sense. So 0.125. Yeah, we go to another ratio that is what we call the pre-tax margin. That's also a profitability ratio. Yeah, so what is the pre-tax margin? Pre means before. Yeah, before tax. So that's mean earning before tax. Yeah, so pre-tax margin. Pre-tax margin or earning before tax ratio. Yeah, mean the same thing. Yeah, so what is the formula for the pre-tax margin? As I have said, it's earning before tax. You divide by what? Revenue. So just go to the statement of profit or loss. Sorry, and you go for profit before tax. This one, yeah. So this is what we have, the profit before tax. You divide by what? By revenue, and you enter. So once you get that, you just drag. It will copy for 2021. There is no calculation outside the text. Yeah. So the other thing which falls under profitability ratio is what we call the return on assets. Yeah, that's also a profitability ratio. Return on assets. Return on assets. Do the same. So the formula is what is key. The formula for return on assets, as the name suggests, is the net profit. Net profit means net income, the profit after tax. You divide by total assets. Yeah, so we check the profit after tax, which is the net profit. So we add profit before tax, income tax expense. then profit after tax. Yeah, so that's what we'll pick. Yeah, don't pick the retained profit for the year. Yeah, no. You pick the profit after tax. That's the net income. So you pick that, you divide by total assets, as the name suggests, return on what? Assets. So you come to assets here, you look at the total value of the assets, which is that value there. Then you enter. So once you enter that, you just drag. Yeah, that should not worry you. The other one, you just copy itself. The other thing is return on equity. Return on equity. Yeah, so what is the formula? The same thing. The return on equity, the same. You take the net profit, divide by total equity. Yeah, so we go back to 2022 statement of profit or loss. The net profit is the profit after tax. That one you divide by what? This now you divide by total equity. So total equity will get it under equity and liabilities. Yeah, so we'll get it here. Ordinary share capital, share premium, and return profit. And they have a total of 13,000. So just divide it directly, then enter. So once you enter that, you just drag for 2021. Sorry, this was a return, but rerun. Okay, so we continue. The other item is the falling under profitability is the earning per share. The earning per share. So we call it EPS. Earning per share. That's also a profitability ratio. So what is the formula for earning per share? As the name suggests, it will be net profit divided by total number of shares. Yeah. So here we didn't have total number of shares. So we'll check under ordinary share capital. Sorry, this one I didn't. Now I think I forget to say this was a 10 shillings. Yeah, per ordinary share. The per value was 10 shillings. Yeah, sorry for that. I won't penalize you students, my students, for this. Yeah, because it's supposed to have 10 shillings. Yeah, the value of each share. Yeah, so we'll add that 10 shillings so that we can get the numbers based on value. Yeah, so it was going for 10 shillings each. That's okay. Yeah, so you correct that. So therefore, our earning before, so earning per share will be equal to the net profit, which is the profit after tax. Sorry, before I do that, let me calculate the number of shares. Yeah, so if you have this as 10 shillings and we have a value of 4,000. Yeah, so for you to get the number of shares, you'll just take 4,000. Divide by what? Because one share was worth 10 shillings. So what about this share that is worth 4,000 shillings? As simple as such. Yeah, so you take this, you divide by 10. Yeah, so we had 400 shares. So I'll use that 400 because these shillings are in millions. These shillings are in millions. Everything we are working with is in millions. Yes, the number of shares here will be equals to the net profit. Sorry, earning per share will be the net profit, which is the profit after tax. So you divide that by the number of what? The number of shares. Yes, the earning per share will be 3.75. So you can do that by dragging for 2021. Don't know why. No. For 2021, we have to get the numbers. Yeah, so what is the total number of shares for 2021? The same calculation. You take 3,200. You divide by 10. Divide by 10. Yeah, so it's 320. It is 320. So you just come here and say the net profit now for 2021 was that 240. You divide by what? You divide by 320, which is the number of shares. Yeah, so the earning for 2021 will be 0.75. Yeah, so I think I'll have to end there, or maybe I'll also calculate another one, which is book value per share. Yeah, let me pick that again. Book value per share. Yeah, I think these are the profitability ratios. So it's always total equity over total number of shares. Yeah. So we already have the total number of shares. So we'll say equals to our total equity for 2021 was 13,000. We divide by what? The number of shares for 2021, which was 400. Enter. So the book value is like 2.5. Then for 2021, we do the same. We look at the total equity, which is 11,900. We divide by what? By 320, which is the total number of shares in the year 2021. Yeah, so that's how we are supposed to handle that part 2 of that question. And as I said, you do 2 correctly, profitability ratios, you get the full 2 minutes. Yeah. Okay, we continue. Roman 3. Roman 3, they're saying determine the turnover ratios for the years 2021 and 2022. So I'll just do the same thing. So here I'll write turnover. The turnover ratios are also called what? The efficiency ratios. Yeah. Efficiency ratio. Okay. So we'll have years until 2022 and 2021. Yeah, so we'll start with the first one. The efficiency ratios, also known as the turnover ratios. Yeah. So in this, you have to know what are the turnover ratios. So we'll start with the total assets turnover ratio. Let's say total assets turnover ratio. Yeah, I won't repeat the word ratio. So I'll just say total assets turnover. Yeah. So what's the formula? So the total assets turnover ratio formula is the net sales over average total assets. Yeah. So we'll have net sales. Yeah. So net sales, because you go to the statement of profit or loss, and we have revenue, and that revenue is the sales. Yeah. In this question, they're not specific. If there's a time that they told you that you have a sales or revenue 3,600, maybe 60% was done through credit, or they were return inwards, then you have to use, if they are return inwards, then you have to use the net sales. Yeah, sales minus return inwards. Yeah, in this question, they're silent. So you pick it the way it is. Yeah, you pick the net sales. In this case, will be our revenue. Let me just make sure. Equal sign. So it will be our revenue. We divide by what? By total. They say total average total assets. Yeah. So in this question, there's no average total assets. So you divide it by total assets. So you just go and check. Total assets here is 15,304. So you divide it that way, then you enter. So once you enter that, you drag, it will get the value for 2020 what? 2021. So we continue with the other ratio is the inventory turnover. Inventory turnover. The formula for the inventory turnover is also the net sales divided by average inventory. So the net sales, we have agreed that that's revenue. You just come here and pick revenue divided by what? By inventory. Divided by inventory. So this is our inventory. Simple as such. Inventory turnover. Then you just drag for the other year. It's giving me 0.6. Yeah, so we do again. Now we look at the other one. The other one is the accounts receivable turnover. Accounts receivable turnover. So what is key is the formula. Once we get the formula, we will get the right answer. Get the right answer. We'll get the right answer. Okay. Yeah, so accounts receivable turnover, the formula. The formula is the net credit sales divided by average accounts receivable. Yeah, but now you see, there was no credit sales. Yeah, what we were given was revenue. So you take that revenue. If they don't specify, if they say that 80% was credit sales, then you take 80% of the revenue amount given. If the question is silent like this, then you pick the net sales. sorry, net credit sales, we pick the revenue, assuming that all revenue were on credit. Yeah. So you take the net credit sales, which is the revenue in this case. Yeah. If at all that 80% of revenue was through credit sales, then you take 80% of this value here. But here they're silent. So you take revenue, divide by what? You divide by what? What was the question? Divided by accounts receivable. They're saying average accounts receivable. This question, there's no average. So you take the accounts receivable directly. What is it? Yeah, that's the trade receivable. You see this one, those are the accounts receivable. So you divide by that, then you enter. So once you enter for that, you just drag accounts receivable turnover. Then we also have accounts receivable days. That's also from part of the efficiency ratios. Accounts receivable, yeah. They will tell you trade or accounts receivable, the same thing. The accounts receivable days, yeah. These are now ratios, but those ratios in days. And I say that in such questions, if the examiner is silent, they don't tell you about the number of days you take per year, then use the 365 days. If they specify there that you use 365, then use that. If they say 360 on the question, then use the 360. Don't use the 365. Okay? Yeah, so what's the formula? So the formula for the accounts receivable days is the accounts receivable, we divide by revenue times 365 days, times the number of days. Yeah, so accounts receivable, like in this case, is our trade receivables for 2022 is that we divide by what? Revenue. Our revenues here. Then you multiply by 365 days here because we want the number of days. Then you enter. So once you enter, you'll have 178, almost 179 days. Yeah, these are in days. So did you do the same? I don't know if I'll be able to track. Drag it won't work because the 365 will be missing. Let me see. Yeah, it captures it automatically. You can see times 365. Yeah. So it means that this will give us 429 because it's account receivable. Is it F31? Let me see. If this was E31, E over E8. So this will be F31 over F8 times 365. That's correct. That's correct. Yeah, so that's how you do the accounts receivable days. Then lastly, we have the accounts payable days. Accounts payable days. So what is the formula? The formula is the accounts payable. You divide by revenue, then you multiply by 365 days in this case. Yeah. So we look at accounts payable. That's the trade payable. Yeah. Consider down here trade payable. So 780 divided by what? Revenue. Divide by that revenue. Then you multiply by 365 days. Yeah, because these are the number of days. Then you enter. So once you get that, you just drag. Yeah, so these days always, you can decide to leave them that way for accuracy purposes, or you reduce the decimals. But I'll advise that you leave them at this point. Yeah, no one will penalize you. Yeah, so those are the turnover ratios, stroke efficiency ratios. We are supposed to calculate. And now number 4, I'll go to Roman 4. Prepare a dashboard relationship between liquidity and solvency, profitability ratios, and turnover ratios. So we are going to prepare what? A dashboard. So this is what you do. Yeah, so it means that dashboard is going to capture all these items. And you can see I could have selected all this, but you see now, let me see. I don't want to lose on. Yeah, let me just select the way it is. Yes, to prepare that dashboard. Let me see. Yeah, because they're talking about what was the examiner saying. Prepare dashboard relationship between liquidity and solvency. That's 1. Profitability ratio. That's 2. And turnover ratio means what you have done. Yeah. So, and you know, it has to also capture the headings. Yeah, so I'll highlight all that, select all that up to the last. That way, cancel. Okay, let me highlight again from liquidity, capture everything. That way. Then you go to insert, then you go to recommended. Uh, sorry. Let me see all charts. Yeah, let me see this clustered column. You can see gross profit margin, operating profit, pre-tax margin, return on assets, total assets, liquidity and solvency ratios. No. Let me do something here. So let me just copy the values, the way they are. Yeah, so this is Roman 4. Yeah, for you to get an accurate answer. So we start with the liquidity and solvency. Yeah, because we are supposed to combine them. You don't do one separately. So this is what I'm going to do. Yeah, I'm going to forget about the liquidity and the headings, and pick the ratios the way they are. Yeah. So I'll copy that. So once I copy that current ratio, I'll drag. So it's okay. Yeah, I'll drag up to that point. Then let me clear this. Clear that. Clear. Okay. Yeah. So from there now, I'll go to the profitability ratios. So I'll also pick the gross profit margin. Yeah, that's how you're supposed to do it. Then you drag so that you get those other values. It was up to. Then lastly, we'll have what? We have the turnovers. So I'll pick that, enter that, then you drag. Okay, so let me do away with this. Good. Yeah. So the other thing that's we are going to factor here is the years. Yeah. So here we'll have 2022. Let me just pick it up here. Then I'll drag to get 2021. Yeah. So this presentation will be okay. Yeah. So here you just say equals to. Then you go to pick the current ratio for that. Then I'll drag this. Yeah, then I'll drag. So I'll come here and drag the up to debt to equity ratio, and we'll have the same values we had here. I just have to confirm. Yeah, that's okay. Then I'll do the same here. I'll just drag up to the last value. Then I'll go to the gross profit margin, which is under profitability, and I also pick that value. So at that point, I can decide to drag up to book value per share. Then I'll do the same here. Come here, drag that. Then I drag all the way to book value. Correct. Then we go now to efficiency ratios, also known as the turnover. We'll do the same. This is just copy pasting. Total assets turnover was this. Once you enter that, just drag. It makes your work easier. Then you also drag this other side. Yeah, so once you get that value, you just drag to finish that. Yeah, and we confirm whether the values are correct. Yeah, you can see the values are correct. Now, once you have this data, this is what we need. So you'll highlight everything. Select, select everything. Then you go to insert. Then you go to recommended charts. Yeah, now you can see this is presentable. So let me get to all charts and see. This is the clustered column. Yeah, this is very okay. This is very okay now. Yeah. So say okay. Then the chart title, you'll write liquidity, and solvency, profitability, and turnover ratios. Yeah, simple as such. Then you click. So once you click outside, it will be copied. So what you do, you drag this here so that the examiner can be able to see it. So the only thing that the examiner will look at is first the ratios. If the values are correct, yeah, so once the values are correct, even if you have a pie chart, because this question they did specify what to give. They just say a dashboard relationship. Yeah, so it's a chart. Yeah, so you can use either pie chart, clustered column, any even line graph to do the presentation. Yeah, so what will be key is the years captured 2022, 2021. You can see the movement, the current ratios, acid test ratio, and these are accounts receivable days. Yeah, so these are the ratios are hiding because they're small values. Yeah, so that's how we are supposed to tackle part 4 of that question. So we go to the last part. Using a formula, create a status column that identifies any instance where the ratio values for 2022 are greater than 2021 as excellent and those less than as poor. Yeah, so we'll do that again. So it's good news. We have captured this information. So our work at Roman 5 will be easy. We'll just copy and paste. Yeah, to save on time. Yeah, so I'll select this. Sorry. Yeah, so I'll select from current ratio from years. Yeah, so yeah, so you control C, then you control V to paste. Control plus V to paste. Yeah, so what they're telling us is that we create a status column here. Yeah, so I'll call it a status column. Then once you're done with that, so let me just increase this, separate that. Yeah, so the instructions are clear. They're saying that using a formula, create a status column that identifies any instance where the ratio values for 2022 are greater than 2021 as excellent and those less than as poor. Yeah, so we'll have a status column. So which function are we going to use? We are going to use the if function. The if function. So you say equals to, then I'll come up there, or then you can see we have if, then I'll say okay, because I want to use the f function. So it will give me a function arguments. Yeah, so I prefer this format because it enables me to explain these things correctly. So there's something I'm confirming here. Because we had current ratio, and here now I don't see the current ratio. We have the let me undo this. Sorry. Let me undo this completely. Let me undo that. Let me escape that. Okay. Yeah, so I copied this, but I don't know why. What is the current ratio here? I don't see it. So let me delete this. Yeah, let me delete this. Then I copy again. I don't know why. Clear all. So, yeah, so this is the data from the current ratio. What I'm doing is that this data from current ratio is what I'm going to use because they've told us that for ratios, we use a formula. Yeah, so I was wondering, I was not able to see them. That value there. So what I will do, let me just do it here. So I'll copy all this. Yeah, Control C, that value. Then you come here and say Control plus V. That, and I don't know why it's jumping. It's jumping. It's okay. It's okay. It's okay. Let me undo that. Let me just undo that. And let me click that. Yeah, so what I'm going to do, let me just pull this down. Huh? Yeah, and let me pull that down and click here. So I'll use this data. Yeah, that data. So I'll say here the status column. Yeah, for answering question 5. Huh? Yeah, so the state Roman 5. Huh? Yeah, so under the status column, we'll use if function. Already I've explained. So we say equals to. Uh, then you go there. So I'll just okay to get the function arguments. Yeah. So the logical test that we are going to do, because I've told that if it is the logical test is that if the values for let's say, let me go back. Using a formula, create a status column that identifies any instant where the ratio values for 2022 are greater than 2021 as excellent. So I'll start there. So my logical test will be, yeah, we are at this ratio. Yes, the ratio under current ratio, 2022, this is the ratio. So I'll click that. If it is greater than 2021, so I'll shift and look at the greater than. If it's greater than what? Than the value for 2021. Yeah, and that already is telling me false, huh? Which is okay. Value if true, if 2022 is greater than E93, then value if true, then that is what? Excellent. Huh? Yeah, so that's an excellent performance. Yeah. If 20 values for 2022 are greater than 2021, that's the logical test. So value if false, yeah, meaning that it's less than. Huh? So value if false, meaning that the values for 2022 are less than 2021, then how do you classify? You classify as poor. Classified as poor. Value if false is poor. Yeah, then you just say okay. Yeah, so once you say okay, you can see that for 2020, current ratio for 2021 is 3.7, but for 21 is 4. Yeah, so it means that this is greater than 21 is greater than this. Yeah, so it captures that it's poor. Yeah, it's poor because 2021, 2022 is less than 2021. Yeah, so once you have that function, you just you drag all the way. You drag that way. Yeah, and you can see we have poor, excellent, poor, poor, excellent. Yeah, excellent. For example, this 0.61 was greater than 0.6, 0.45 greater than 0.12. Yeah. So that's how you are supposed to use the logical function if to answer this question. And you get your total of how many marks? 10 marks. So thank you so much for taking your time to watch this video, and have a blessed evening or night or day wherever you are. So I'll be doing a question, every single question every day. So you'll be on standby, you subscribe. Thank you so much for your time and have a blessed evening wherever you are.